All right, hello everybody, and welcome to the Middle Class Investor. This is Seth Martin. It is Friday, June 16th, and it's about 10:30 in the evening. I'm recording this tonight after Friday's session. Today we had the big news in the market, if you will, was the Amazon. If I can get the symbol right, the Amazon purchase of Whole Foods. And you can see this is what Amazon did today. It's kind of an inside week. This week here is inside of this other week, which could be bullish. You'd want to see a close above this before we would say that was bullish. And let's see, Whole Foods, I think is it WFM? Yeah, Whole Foods was up really big. That's because Amazon paid top dollar for the stock, so no question that that's bullish. Now notice that since 2013, Amazon has gone down, and notice it went right to this trend line. All I did was draw this, touch these two, and extend this out, and went right to the trend line. Now, what typically happens here is if you're a trader, when you get a situation like this, you start looking for places to go short. So, expecting this to recoil from this trend line and move down in this direction. I'm not sure if that's going to happen. Certainly, if you were a trader, that's how you would trade this, and then you would put a stop above this high somewhere, probably around 43 or 44. So, but this, this is new information to the market, so it's possible that it could just keep on rallying and then pull back and then take off. So it all depends on what Amazon's going to do with Whole Foods. At the end of the day, they got to run a business, and so I suspect they're going to bring some sort of supply chain management improvement to Whole Foods in order to, deliver groceries, get groceries there fresher, and turn over the inventory quicker, things like that. I don't know exactly. I don't pretend to know anything about the grocery business or Amazon's business for that matter. But anyway, that was the big deal, and Kroger and some other companies kind of took it on the chin. Kroger's a good company here, but they were down today. If you were to look at some of the other grocery companies, and I don't know who they are, so we're not going to look at them right now. We're going to go back to the S&P 500, because at the end of the day, you can take positions in stocks, but what we're trying to do here is make sure that we're not in any stocks if a bear market happens. Excuse me, if a bear market happens. And so, as you know, we're anticipating the start of a big bear market, and we still have not gotten this pullback that we're due, and so we're still expecting that. I'm going to show you a chart here in a second. In fact, I'm just going to go to it right now rather than delay. It's from my Elliott Wave forecast that I get, and you can see here this is the last run up. This is a 240-minute chart, so each bar on here is 240 minutes, and you can see we finished. They're saying we finished wave 3 here, and then and now we're in a countdown. Okay, sorry about that. I must hit the wrong button. You can see we're in this triangle pattern here, and the good thing about a triangle is once the triangle is complete, that signals the end of the trend. So these triangles, when they happen like this in the fourth wave position, it signals the end of the trend. So in other words, once this wave 5 is complete, this trend will end. And so what does that mean? And we're going to go back and look at the S&P 500 chart on my Thinkorswim page here in a minute. But so when we get a triangle in a fourth wave position, and then we get wave 5, we know that this whole trend is over. So then the question becomes, well, where did the trend start? Okay, so we're going to go back and look at that. Well, that particular trend started right here. So when this trend is over, you can expect the market to pull back into this area here below 1800, because that's what happens after you get the end of a trend, and of course, again, the fourth wave triangle in the fourth wave position signals the end of the trend. So I know if you don't know anything about LA wave, that may sound like, well, how do you know? Nobody knows that, But that's probabilistically, that's what tends to happen. So there is a probability, a real low probability that doesn't happen, but it's, from a trading standpoint, it's a very good reward to risk. So anyway, that's what I'm expecting to happen here. So we got to finish out the triangle, which it looked like it finished today. So we should see a pretty rapid move up early next week, and then immediately sell off into this area here. So might want to keep an eye out for that. That's likely to start next week, and it may take next week and the next week for that to actually make the high and then roll over and come down and make the low. It could take several weeks actually. So we might be talking about this for a few weeks. All right, let's look at the VIX. We haven't looked at the VIX in the last couple of sessions, I don't think. If we have, then I stand corrected, but I don't think we have, at least not in any great detail. So the VIX is very, very low. It's been choppy. We had this one spike up here, which it's occurred to me that you might not be able to see because it's way down here on the bottom. Let's try that. So we had this spike up right here where the VIX ran up to the trend line and then pulled back immediately. It didn't spend any time there at all. So eventually the VIX is going to bust out of this, okay? And that's that usually means that the market is selling off. So when the VIX is low like this, you have to have a heightened sense of risk. What's the word? Just sense of risk. You just need to be aware of the risk. That's what the VIX tends to tell us. So the next thing I want to look at is the 13-week Treasury, which is what we look at to tell us what the Fed was going to do. Now this data here is just bad data. Just ignore this long tail. All this right here is just bad data. But you can see that we're in a very strong trend, probably some sort of 10-period moving average trend. We're staying above here, and so as long as we're on this, and we could get a pullback here pretty soon. I mean, that's certainly possible. We could get it won't be a triangle, but it could be a zigzag, something like this, an ABC, and then we should see pretty rapid movement. Although this is not this particular chart series doesn't trade like the bond market because it's not tied to the bond market. It's more of an index associated with the real short-term Treasury activity. Really, again, we've talked about this many times in here. The real key market is this 10-year Treasury. And if you recall last week, we talked about it probably would come back and close the gap, which it's done. You can see here the gap was right here at this black line, and it closed the gap and then some into this blue box. Now, again, there's a possibility it could come back even lower down to the midline of this large white candle that's back here. Anytime you have a large candle like this one, the midpoint will sometimes provide support. So we could see the bond market rally, the yield market fall off even a little bit more. But once this is over, we should see yields really start to move. I don't think the Fed is expecting interest rates to move as fast as they're going to move. And unfortunately for the market and market participants, investors, they're going to keep raising rates. As long as these curves are going up, they're going to keep raising rates. And it's just going to crush the financials and the banking industry, which is going to cause problems in our economy. Okay, the economy really doesn't grow without the banking business. So here's the XLF. So what's happening in the XLF? Well, it looks like we're on the cusp of making a lower high. So we've got this high back here, and let me back up just a second here. So we had some sort of consolidation here, and then a breakout. It's probably A, B, C's right here. And then it looks like maybe, let me just see if I can fit this on the page. It looks like maybe this was kind of a 1, and then, A, B, C, 2, down to here. And this is all 3 right here. We had some sort of consolidation, and then boom, up to wave 5. So we've talked about this many times. So if the trend's going to continue, you get a pullback into this area, which it did. But then it didn't really take off. It's kind of floundering around here. So right now, let me zoom back in, but move it over a little bit. Right now we have a pivot high right there with some sort of pullback, and then it looks like, it's starting to make dojis here. It could stop here and roll over, and if it does, then that tells us that potentially this is the start of a change in trend for the XLF. So we'll just have to wait and see, but certainly the XLF has been going up for a long time. We had this huge pullback here, and then a breakout with what looks like a wave 5. If we were to zoom in on this, if we were to go back 10 years, let's say, see this looks like a 1, 2, 3, 4, 5. So which tells me we're at least coming back here to 15 or 14, and potentially even lower down here somewhere, maybe even below the 2009 low, which is, really insane when you think about it, but the charts don't lie. The charts are the charts. So sorry about the in and out there. So just keep that in mind. Let's pull back up on a 5-year weekly chart, and let's look at some of the countries. Let's look at the United Kingdom. We've been watching all these, for a while, and the UK is above this box that we drew here which was off this pivot, but it is in this channel, which tends to be indicative of a pullback. So I think I shared with you last time, I'm not really sure what's going on here with the UK market, which is the FTSE. It might just be consolidating, and then it's going to, proceed upward, maybe all the way to here. I don't know, but my gut feeling is that this is probably in some larger, A, B, and then C down, and then we'll have a big move in Britain's market. So let's look at a 20-year just in case. Yeah, so yeah, this could be, I don't know. It's really hard to say. I mean, this looks, I don't know. It's very choppy. You got kind of a almost like a megaphone pattern, which is, one of these deals where the highs get higher and the lows get lower. Although the lows look pretty they look pretty flat. So maybe this is an ascending triangle. So maybe it comes down to here, or maybe all the way to here, and then rallies and breaks out of this ascending triangle. I don't know. It's not clear, and when things aren't clear, there's really nothing to do but step aside. Now I think the UK currency market is more clear. Here's Japan. It looks to me like we've got some sort of ABC happening here, where this is A, B, C, C down, and then I don't know. Again, not clear, but what we were drawing these boxes on were these previous pivots. So this kind of looks like an A, B, C, right? So this pivot here, let me show you which one I'm talking about because I'm kind of swirling around and making the screen hard to see. I'm talking about this pivot right here. So this pivot is where we drew our box, and it looks like, it's doing what it's supposed to be doing. Now, if next week looks like this, then potentially this is topped, and we should expect it to continue to fall this way. Again, that's Japan. Let's look at Germany. Germany looks similar to Japan, a little bit more bullish than Japan, but you can see that it's got the same kind of looking doji thing. So I still expect Germany to get up into this box somehow, then maybe make a doji, maybe one like this, and then we'll look for something, like so, and then continue back down. This chart looks more bullish than the Japan chart, but still these are big moves, and so it's really hard to say what these are. I think you have to take more of just a regular technical stance on this, which, I mean, this could be just a big old cup with handle, and this is a new breakout, and the thing's going to the moon. So I don't think so, but the chart kind of shows that. So I don't claim to have any fundamental information, so I look at charts. All right, let's switch over to toss charts, and let's look at the euro. You see the euro has been going down for a while. Then it really started to slide here. And then it consolidated in this triangle. And remember what I said, once a triangle is made, that usually means the end of this trend, so the end of the downtrend. Now, it's really not clear. This almost looks corrective here. If I draw some parallel lines, I don't know why so much of the market is unclear right now, but the market's design is to fool most of the people most of the time. So it doesn't surprise me that it's hard to see what's going on. Based on this, maybe the euro goes slightly higher and then starts to roll over. But it's hard to see. I mean, for a while I was short the euro and made a little money and then gave some back, and now I'm just kind of sitting on my hands with the euro. Now the other thing is this trend line here looks like it's kind of working. If we connect that and that, then that shows that maybe this has a little higher to go. So we'll just have to see. I mean, if the euro, let's see what it's doing here. Yeah, see, so if the euro gets below here, or maybe crosses below the 111 point, I might just go short and try to short it back down to here, back down to 108.50. I don't know. I haven't decided, but definitely this has already run a long way, and probably the next move is short, not long. Now we were talking about the British pound, and you can see here on the British pound that we've made a lower high here. So here's a pivot, right? But this pivot, this new pivot, is lower than the old pivot. So it's a lower high. Now it could rally from here and go up and make a higher high. It can make a significantly higher high. My feeling is it hasn't pulled back yet enough, and probably we're going to see this currency pull back into this yellow box somewhere, maybe quite deep. And this is where I thought it'd be a good somewhere in here would be a good opportunity to get long the British pound, US dollar. The way we talked about doing that was in the FXB. So let me go back over here, and we'll just look at the FXB real quick. Oops. And let me get back on a weekly, so you're not looking too big a chart there. So, the FXB is pulling back like we said it would probably do. It's kind of chopping back and seems to be in a channel. And so, hopefully it'll pull back even further, like so. Maybe do something kind of sideways and then really pull back. And what would be really nice is if we got a tail, like something like that. So now what you've got is a low. This is our low right here. A high, a higher low, a higher high, a higher low. So what is that? That's stair steps. That's a trend. So what you would look for then is a break, a close above this, and you get in gear with the trend about 123, and look for it to trade up into this area. So, it looks like to me that the British pound is finished going down. So, again, in the bear market, there's going to be a need to try to find things that are going up when everything else is going down. And so, potentially, the FXB is one of those things. All right, let's switch back over to toss charts, and let's look at, we already looked at the euro, we looked at the British pound. Let's look at gold and silver. Obviously, our long-term target on gold is way down here, but gold has some bullishness to do before it gets way down there. And you can see we've kind of chopped around here. Ultimately, what I'm anticipating gold to do is to make it up into this area before it really sells off again. These are huge trends in these markets. It takes a long time for all these sub formations to play out. And it's just the nature of the beast. It's just going to take a long time. So the good news is you have time to be patient, to learn along the way, take some of these smaller trends as trades, make some money. The bad news is you have to really be patient. You have to kind of sit on your hands sometimes. So here's the silver chart. Same thing, really the same thing. Okay, we're looking. Ultimately, this could pull back down to here, let's say, But ultimately, we're looking for silver to make a run up into this resistance area. Okay. Let's see what else we have. Yeah, we could look at the Dow. Let's look at oil. So oil's been selling off. There's a lot of talk about, is this the bottom? Blah blah blah. People. I don't know. The answer is I don't know if it's the bottom, but what I do know is there's a lot of chop in through here, which could mean that this is starting to roll over. Maybe we're going to have some sort of triangle, where it goes here, and then it comes all the way back down to say here, and then it goes all the way back up to here, and then down to here, and then down to here. So that would be A, B, C, D, E, and then boom, a lower low. That's certainly possible. We need to be prepared for that. But I would say that it's probably going to take a long time to play out. And the reason I say that is because you just had so much damage to the chart right through here. And it takes time for the market participants to kind of recover from all that. Now the other thing, let's erase this and let's look at drawings. Let's do Fibonacci retracement. So we had this move down here, which was not insignificant. Okay, and the 62% retracement is way up here at $79. So that's quite a ways from where we are. So it could mean that this is just the first wave in a long, in a 1, 2, 3, 4, 5 down. So keep a close eye on oil. I think what I think is going to happen with oil is, man, I can't seem to get these. Okay, there we go. I can't seem to get these charts working the way I want to work them. But if we look at this on a really long-term basis, let's go out 20 years. Am I already out 20 years? 20 years weekly. Well, I don't know. I can't make it go any further out. But anyway, we've got a really potential long-term pattern on oil, which means oil's likely to go a whole lot higher. So, but it could actually go a little bit lower first. So I want to keep that in mind. The other, so I showed you the Elliott wave chart. The other thing that I want to show you is another guy I follow, a guy named Deneric. So this is the intermediate wave 5 move up that we've been talking about. This was the 2000 top over here, and the rundown into that, and then this was like George Bush up to here, and this was all the financial crisis. So this intermediate wave 5 is this last move up that we've had since the 2009 low. And one of the things Deneric does is he looks at symmetry. So he's looking at this wave 1, 2 combination, and then wave 3, and then the wave 4 and 5 combination. And what he's trying to show is the symmetry between waves 4 and 5 and waves 1 and 2, which is pretty typical in this type of study. And he's showing that this could take as long as the end of 2017 to come to an end, or it could be say midway through 2018, or it could start as early as toward the end of this year with the completion of wave 5. So anyway, that's just something to think about. We're at the beginning of that little box area, and we've got a little higher to go. Now this is the Wilshire 5000. He uses that because it's got more stocks in it, and it's supposed to reflect, social mood a little bit better. The only other thing I wanted to show you, and I'm gonna post this video, is this. There's this Jim Rogers interview on here. This is "Get Ready for the Worst Crash in Our Lifetime" video, and I'm gonna post the video on the website so that you can see it. It's a pretty good interview. It's very short. You can see it's only 4 minutes. If you don't know who Jim Rogers is, you can Google him. This guy is as smart as you think Warren Buffett is. This guy is about 100 times smarter. So you should listen to what he has to say. He knows what he's talking about. But I will post that video so everybody can see it. All right, I guess that is it for this week's recording. If you have any comments or questions, put them in the comment section. And that's it, and we'll talk to you next week. Thanks, everybody. Bye-bye.